GM everyone, welcome back to another episode of Touchgrass Podcast. This is a very special one for me and Rachit as well. We have Mike from Pyth. We're going to talk all about oracles. They play such a critical role in crypto infra and all the apps and recent stuff that's been happening in DeFi and perps and TradFi getting on chain. Kind of oracles play a major role, and we want to talk all about that. Welcome to the show, Mike.
All right, KG, great to be here. Excited to talk to you about this.
Awesome. Before we get started, I think everyone already knows you, but if you can give a small background about yourself in space, that'd be great.
Yeah, so I'm the CEO and founder of Doro Labs, and we're the main development company behind the Pyth network. Pyth was more or less incubated at Jump, where I was working prior to this. My background before that was in foreign exchange roles at a combination of exchanges and banks. And I think it's like that sort of framework has always been really helpful. I've been in a bunch of different roles, from like operations to sales and trading, and got to understand like the big picture of the FX market in particular. That was super helpful with understanding that, it's all the same from one asset class to another. I ended up bouncing around a couple different asset classes, but like there's always some form of like exchange entity, and then there's some form of like credit entity, and then there's some form of like clearing entity. And that market structure, which everyone has different names for, and they all pretend that like their entity is different, and they have different ways of saying it to make the other people feel like they're not part of the tribe. But I think that framing is great for DeFi because we have all of it. All right, we have all the things. We have the clearing houses, kind of layer ones. We've got the ability to send stuff. Like bridges. We've got obviously market data with like Pyth, So that's kind of my fascination and the things that I really like about this segment of building in DeFi is like we get to build these primitives, this infrastructure, and we can do it with different assumptions. It's not like every element of it always is going to be better, but you've got a totally different way to think about the problem, and then you can do all these optimizations, and you kind of end up in a really interesting place.
That's super interesting. And Mike, having spent so much time in like the traditional finance world and now having seen the crypto world sort of unfold, do you think the crypto native culture and the institutional culture is sort of converging? Like when you hang out with institutional people, when you hang out with crypto native people, is everyone behaving the same way now?
It depends. It depends. I like, so I still like Pyth is pretty funny because we've got a very specific publisher set of like institutions. And we like onboard more institutions, but these are like all of the trading firms that we've had on. We've had a lot of exchanges, and we've got like a bunch of banks joining and brokers. So we spend a lot of time with them, and they haven't really changed all that much. Like they haven't come over to the crypto side of things. They operate and act like bankers. Now they understand how this can work, and you have to fit it into a specific plug, and they ask all these kind of questions about it. And then we deal with, the degen side because that's where all of our data is being used. So I've seen a lot of people that blend both. Like, for example, we hired this guy, Mike James from JP Morgan. He worked there for a long time. This was his first job within DeFi or within crypto. And he really seamlessly blends it. And so you see like these little types of people that like have, they're right in the middle of the Venn diagram. But then like, as soon as you go bring in the person at XYZ bank who's like responsible for crypto, and you're expecting them to know everything that's going on like Hyperliquid and HIP3, and like they're like, what's a HIP? Like, okay, all right, let's slow things down a little bit. So maybe I'm not expecting, my expectations are a little bit lower, but I think it's taking a little bit longer than I would have thought.
Yeah, and KG, like I spent a lot of time with Mike in Korea. I would say Mike's like one of the few people in the industry that can wear a suit and stand in front of like the US Department of Commerce and then come back to Korea and just, run it degen style and have a great time. So
that was a great dinner, by the way, you guys had.
Thanks, Mike. But Mike, like I want to rewind this back a little bit. Obviously Pyth's been on this amazing journey. It powers 100 plus different chains. Walk us through the journey of like, you're doing a lot more institutional stuff now. Like talk us about, the road from first chain to 100.
Yeah. So the core hypothesis with Pyth was the current Oracle networks were, number one, too slow to be useful for creating trading applications, and two, limited in scope of asset types. And that was like the whole fundamental. We're like, the world needs faster oracles, and where are the current oracles going to get the price of Tesla? And that was like if Solana was going to be NASDAQ on the blockchain, that was like their aspirational thing to do. We were like the price of Tesla on chain. And the problem is when you start peeling out the onion on, because you ask your random person, it's the biggest paradox in all of finance is market data. Because you ask your average person, like, what do you do? Like, oh, well, we provide the price of we provide market data. And your average person be like, that's the least exciting thing. Who cares? I go to TradingView. And you were to tell that same thing to, a guy at Jane Street or Morgan Stanley, like, it's impossible. You'll never be able to do it. And like the fact that that can exist in both instances is crazy. So that's like the grand problem with market data, because everyone, you go to Yahoo Finance or TradingView, you get okay-ish data. Now, if you were to look through the data agreements, like you can use that for very limited things. Like you can't use that in a professional capacity. You can't use that for DeFi. And the reason for it is because all the institutional users, like, the people that are using Bloomberg's, well, they pay a fortune. And that's why it exists. That's why there's this paradox of market data. So we couldn't go to NASDAQ. There's no market data agreement that you can buy from NASDAQ that allows you to publish onto a public blockchain, because that's like going and broadcasting all their data to everyone in the world. Every person that gets NASDAQ data is required to get it with an API key, so they know exactly how much data you're using. It's like you're paying on tokens, you're paying on calls, and that kind of thing. So, we figured out, well, where can we get data? I was at Jump. Jump's like, well, we got a whole bunch of data. We don't do anything with it, just sitting in the garage collecting dust. And so we went to all the trading firms like Jump, the Jane Street, Susquehanna's, DRW's, and said, hey, you've got a bunch of data. It's in your garage collecting dust. What if we put it all together? And like within 30 seconds, everyone, gets the idea. They're like, this is great. I pay at least 10% more every single year for the exact same market data. In the best of scenarios, in the more, let's say, chagrined scenarios, there's like the trading firms that are like, I'm buying my own effing data back. I'm 40% of the entire market of options. How dare they go and charge me for this data? And they charge me more and more every year. So like we were able to harness all of this, this disgruntled energy, and really quickly scale up the supply side of the network. And we really quickly created a price of Tesla. And I'll get to that in a bit, but like for now, put a pin in it as that's like the Bubba Gump shrimp boat that's been waiting for a storm, the price of Tesla, but so because nobody used it for a long time. And then we started our journey on like, okay, we got to get this data out on chain. We started on Solana mainnet. We were 75% of the block space in Solana mainnet. Thankfully, it was pretty cheap back then. And we wanted to connect to other applications. Wormhole was our partner to be able to go cross chain. The only problem was these are in the early days of Solana, and Solana used to, remember, go down. And so when we were trying to go and pitch to a application on Polygon or Avalanche or Near, we would then say, yeah, we do have this dependency on Solana. And they would say, this is not good enough for us. So we forked it. We created PythNet v1. And it was the exact same code with a few enhancements. The major enhancement was we kind of turned it into a proof of authority chain, because we made it so that the only people that could run validators were the publishers of the network. And so we kind of forced it to become a data chain. And we also prohibited other apps from getting onto the network. So it only ever ran the Pyth network. So it was a proper application specific chain. Which was cool, because we wouldn't have been able to do this without Wormhole. If we did this and we were this island, well, it's great, but it's not very usable. So it was really that partnership was so critical to being able to make this work. And then we could convert it. This is really cool, because then we could just spam the crap out of this PythNet, because the gas was effectively a non-competitive asset. There's only one application paying for it. We know who all the validators are. They're the publishers. Like, you don't really need to make it a competitive market. And so you could just spam the crap out of it. And so that means we could add lots of symbols. However, with Solana, there is only so much you can add on there. And so we were basically just like the aspiration, like I want to have every asset listed ever. But we got to, on this first version, we got to about 500 different symbols. And then we made it so that you could like go and like pull these to other chains, and like you just send one message. We don't have to go and like push to all the chains and have to worry about the gas on the other chains. So that's been like the journey of the building this up. And then on the usage side, I think our very first user was Drift, and they two names ago, either Moet or Champagne, and it was in a Solana hackathon in March of 2021, and we've kind of grown ever since. So people like us for the ability to quickly get lots and lots of markets, and also the fact that the markets are fast. So those, that core tenets of what we were building for, those still stand today as the reason why people want to use the Pyth network.
Yeah, and I think, one thing that Mike didn't mention that I do want to mention is, if you think back to the era when Pyth was sort of growing, I think the Pyth team changed the playbook in terms of how an infra partner can actually spotlight a dApp without it being the inverse. So there were actually people who were using applications because they were powered by Pyth, not because the application was highlighted on XYZ, different platform. I thought that was really interesting, and it really changed how infrastructure marketing was done. So that's something I always talk to the Pyth team. It's just incredible how you guys were able to do that.
I mean, when you map out our ecosystem, there's 700, just about 700 applications using Pyth. I mean, there's not many blockchains that have 700 applications, and we're on 110 blockchains. There's, I think, 120 or so publishers in the network. So there's a lot of moving pieces, and there's like a lot of stuff going on. Oh yeah, and so symbols wise, we finished PythNet V1. We moved now to what we call PythNet V2, and this is Pyth Pro. Now we've scaled up to 3,000 different symbols, and we've basically done enough optimizations where we can kind of arbitrarily add symbols without any short-term ceilings to bump into. So we want to hit 3,000 this year. Next year, we want to go 10,000, a year after 100,000. That's really where we think the explosive growth is going to be.
That's awesome. And I think one of the crucial aspects of your kind of scaling journey has been as well, where in the last couple of years, the entire market kind of just got so much more complicated in terms of DeFi, where we had restaking, we had all these stable coins, and it just kind of pricing them in and plugging that data into different apps has just gotten more complicated as well. So that is something I really want to kind of emphasize in our next point, where for someone who's just new in the space, they just see so many sources of truth. And as someone who has supporting hundreds of chains, hundreds of apps, you are like right now the most prominent source of truth in crypto. But for someone who's very new to the space, how should they think about it? Like, where should they kind of look at it, data, and like, there's so many providers, there's an abundance of that, and it keeps growing. So in kind of wrapping it up, like, how should someone think about source of truth in crypto, where the markets keep expanding and there's just so many asset classes coming on board as well?
We issued a letter into the SEC earlier this year advocating for best practices of Oracle networks. And I think that these ones are really important. So the best practices of an Oracle network are you disclose the sources. And we disclose all of the sources that are part of the network. And then we don't disclose exactly which source makes up which price at which time. But the superset. And then you have a minimum number of publishers for each generation of a symbol to be able to be met. So you have this min pub, somewhere between like 6 to 15. And that allows you to avoid the collusion effect, right? So these two things, right? Number one, if you look at the superset and you're like, do I think that there's a bunch of people in here that are going to collude? You have that decision to make. And then number two, you think through the min pub one, and you think, well, what is it going to take for those publishers to be able to collude on this? You look at the active number of publishers, and then you say the min pub. So if you pick the most extreme example to try and find some like a collusion element, is you pick a symbol where the publishers are as close to the min pub. Now they don't know who each other are, right? Like they don't, they also are in the dark. So you sort of have to you have to guess like that you're in the same publisher network as these other publishers to try and then go collude. And it's not like the LIBOR scandal, which is like LIBOR was this big thing where like the traders at banks would go and pick a number out of thin air of what they thought the price of the overnight interest rate swap should be. There's no way to check it. It's like, that's the number. Like, well, what do we check it against? Like, there's nothing else. In our case, it's immediately observable because we are a aggregate source of all the information all around the world. Like if Bitcoin trades on Upbit, on Coinbase, on Binance, and they all have different prices, we're going to aggregate all the information together and we're going to have a singular price. We also going to have a confidence interval. Hopefully the confidence interval is going to be wide if those three things diverge, but it's going to give you all of that, all those inputs together. And then you can say, okay, relative to Upbit, where was it? Relative to Binance, right? And I think that's like an important thing. As soon as we were to be wrong, if we were to be wrong, you just go immediately check. So you've removed all of those risks around what it would take to try and make the price wrong, what it would take for people to be able to collude. I think that is critically important. And it's not something that other oracles do. Other oracles don't tell you where their sources are. There's one simple reason for it, because they didn't build an entire data business. They just built this delivery business, which goes and gets data from places where you can buy data and distribute it for. And I'm going to pull a pin out of the of where I put the Bubba Gump shrimp boat. But basically, the reason why the crypto markets and oracles within crypto markets has been more interesting than they are today, is because crypto data is currently free, generally speaking. And the reason for that is because of where we are in the life cycle of crypto. Binance is the largest exchange in the world. They make their data free because they know that if people see their data on TradingView or on Yahoo Finance, like, Binance, they're the number one thing that people look at for there's free data on Bitcoin. Maybe I'll go open an account there. They're all think about it from that perspective. That is not how it works in traditional assets. Like if you want to go get the price of the SP 500 future, the ES, the CME is going to charge you an arm and a leg to be able to get real-time data for it. So nobody else has built a data business. So they have to go and buy the data from other places and distribute it. They've built sort of like a Guardian style network where there's a lot of people that can attest to the validity of that price and then make sure that, what goes in comes out. And so we've kind of gotten to this point where you've gotten all of this crypto data amassed. Other oracles never told you where the data was coming from because they didn't have great sources. They said, we bring it from aggregators, we buy it. That then breaks. As soon as you start trying to get into the world of expensive market data, which is all the world's market data outside of crypto, which has had literally almost zero consumption on chain until this year because of a guy named Gary Gensler. And everyone's just terrified to list a real world asset on a chain. Because there would be, a Wells notice immediately that would go out. And now we're seeing this explosion. And that is where I'm saying we're the bubblegum shrimp boat, because we're seeing this torrent of interest from people that want the price of Tesla, not just the price of Tesla during the day. They actually want, pre and post and overnight. We've got all that as well. And so we're starting to get all this inbound. And if you're an Oracle provider and you're trying to go scrap together, well, how do we go get it? It doesn't exist. We did it by building this crazy data business years ago. And we're able to now arbitrarily add any symbol that we want in the world, as long as, the top 100 traders in the world and exchanges already trade it. So is this a long-winded way to say it's super important to make sure that you understand how the data that you're reading has been constructed?
Yeah, I think you mentioned it before, where you're like, we already scaled the supply side before all this demand, and now we are just meeting that demand because we already kind of solved the supply side of the market.
That's exactly right. We built this brick by brick, and it's like the hardest thing in the world. It's like we have a diagram that like shows when I go to like banks and stuff, and we present, what does the market look like? And you think about market data, and there's basically the traders, and then there's the exchanges, and then there's like data distributors like Refinitives and Bloomberg's, and then there's like market data consumers. And so if you're like a market data consumer, the way it works today is like, it's like cable TV in the 90s. you go to Bloomberg and you say, hey, give me a package. And it's like, okay, we'll give you a bunch of data. And then you're like, oh, but I need CME data. Like, okay, cool. You have this now relationship with CME. You have to buy this as a premium. I want LSE data. Okay, you have this one. And the bills just get bigger and bigger and bigger. And you can like put in very specific numbers, like how much revenue is being made at all these different spots. And so like you basically make about like $30 billion on the distributors. You make like $30 billion on the exchanges. And then you get over to like the traders, like where it's like the upstream source of it, and it's $0. And so like anyone who's gone to like taken one business school class in their life would be like, well, this is pretty simple. Like I just go get these guys to go create the data. It's worth $60 billion. Like, why wouldn't I do that? And the reason you wouldn't do it is because it was really tough to do. It's like herding cats. You got to go put them all together. There's, a really difficult organizational thing. You couldn't have done this without crypto, because you start to put together, like they've always done these exchange conglomerates where like the big traders go start a new exchange, like Memex or like the one they created in Dallas. Like it's standard, right? Like when the exchange gets too big, you want to go and create a new competitor for it. Like makes sense. Like put competitive markets on the there. But we did this for market data that required so many more players, because we were trying to be so asset class agnostic, that just took a really long time.
Is this sort of, Mike, is this the transition towards Pyth Pro and that becoming an offering? Like I was after the Fogo Fest, I saw Austin's tweet where it was like, you either die a hero or you live long enough to be B2B SaaS. Is this sort of where Pyth Pro's vision comes from as well?
Yeah. So we actually created to launch Pyth Pro a little like Batman style video that has that as the tagline. But basically we created Pyth to solve the blockchain problem. And then we created this data thing as a byproduct, almost like an AWS, where like we're the biggest users of it, of course. But oh my God, this is now something that people are paying $50 billion a year for, that we have a cost basis of 0 on. And so that's where we realized, well, we got to start selling this. And so Pyth Pro is that. And the way that I want to kind of make it a new and exciting, optimistic sci-fi future is I want it to become the Spotify of market data subscriptions. So like you pay 10 grand. Now 10 grand, by the way, is like, that's like 1/10 of what you'd pay for like one market data subscription for one asset class. But you pay 10 grand, and we just keep filling it up and making it bigger and bigger. So it starts with all the world's crypto, and then we add all the US equities, and then we add all the world's FX, and now we have all the world's rates and so on. It just keeps amassing all of this world's data. And I think that's an aspirational thing that is a worthwhile endeavor to try and pursue. Along the way, we'll find quirks and stuff, and like where, we won't be able to get like specific metals data because there's only one place in the world where it trades, and like that'll be a carve out, but like broadly speaking, it's going to be a better use case for non-executable data for a large majority of people around the world. And it might be the case that like some people ask me like, well, oh man, the exchanges must hate you. I think we work really well with the exchange. In fact, like we've got SIBO, the third largest US equity exchange, who's a big member of the network. They view this as a big distribution asymmetry between like they already have their existing networks. These are net new users. Net new users and crypto is well understood, but I think there's a huge swath of people who've been left behind in being able to get into the capital markets because of the price of market data. We've just been optimizing for the rich, hedge funds that can pay for it, and thus charging them more and more every year. We've left out all these other smaller consumers. And I think those smaller consumers will become Pyth users. And I think just like we've seen with the growth of the global revenues for the industry, I think it'll grow. I actually think that Pyth is going to bring in so many more people into consuming market data, because now they're involved in financial markets around the world from other parts of the world outside, the highly developed markets.
100%. I want to talk a little about perps. I think they're like the biggest narrative, and they've been really hard this year, and perp dexes are not slowing down. And I think if I remember correctly, you guys support pretty much 60% of the entire derivatives market. Before my actual question, I think it's been like 1 month since 10th October. What was it like for you guys on that day with so much volatility. Stable coins were depegging where on centralized exchanges they were off, on chain they were pretty much nothing was that much affected in like in the case of Athena and stuff. But yeah, with that much volatility, one of the things that usually breaks is kind of Oracle. Sometimes we have seen in the past. But yeah, what was it like for you guys on that day?
I mean, it was mayhem. It was absolute mayhem. But I mean, we were watching yesterday. We've had 2 depegs of stable coins this week alone. Like we had, DUSD yesterday. Like it's crazy. But 1010 in particular, knock on wood, we held up incredibly well. We have spent a lot of time investing in the infrastructure, on the architecture, on the alerting, on making sure that we're able to sustain those types of markets. And we won't stop, right? Like that's like the core thing. I was like, now that we sort of built the supply, we've built like the network, we just got to make sure it keeps getting better and better and more resilient. For example, like we're constantly improving the algorithm that does rewards for publishers based on a series of benchmarks. And this is an important thing when you're talking to, for example, the SEC about like how can they use decentralized Oracle data into the framework for best execution or vendor display rule. So like it's a huge component of our team. It's a huge component of our business to make sure that we work. Now my comments on the day, or just probably like yours and everyone else's, it was crazy that Binance was using their own price for USDE. Like that was a big problem. And it was also almost equally crazy that like the alternative, which was like pegged to Tether, worked out great. Because like they both terrified me.
It was hard for
people people were like, oh, Aave is great because they pegged to Tether. Like, oh, that doesn't seem like a great idea. Like we were at like 98 or 97 cents. So like we represented that Binance was off, but largely where the liquidity was more accessible, which was on chain, it was still working. It was impacted. Our confidence interval was quite wide. And so people do bring down leverage when they see confidence intervals go wide, because they're going to incorporate that as being a higher risky operation. But we felt good about our outcome. Now, I don't know if, I mean, since then, like I obviously like Binance is, I believe, incorporating now Pyth data into their marks as well. Obviously they've learned and gotten smarter from it. I don't know if Aave has changed their methodology. I do know that with 2 depegs in a week, I can tell you it's not a good idea to peg to any sort of anything. Like you need to have some observable price. Ultimately, people want a VWAP. There's like other people that are going out trying to like reinvent this, but like basically what you want is like to have some correlation between the volume that you're marking versus the volume that's accessible on chain, and basically have it like decay through the through the book based on it. But yeah, I mean, those are all the things that happened on 1010.
Yeah, I think like at least in the recent events, and obviously glad to hear that like on 1010 you guys were fully functional, and glad nothing, I mean, it's like Oracle's had that picture in that graphic where there's all these crypto apps and the apps, and Oracle's at the part in the bottom where if it falls out, everything kind of dies.
I think it's like that. The door, the door and the bolt on the door is like the Cheeto. Yeah, that's when I hear people tell me that they're using a pegged, like fixed it at 1. That's literally the thing that comes to my mind, is the Cheeto meme.
Yeah, but also like in the recent events that we saw, stream finance and whatnot. But the main thing that kind of caught for me is like when people say they're isolated, they're not really isolated. There's always some kind of correlation, like related to some other markets that's happening, where someone says we are all verifiable and everything's on chain, but in it's only partially on chain, where some things are on chain, some things are on other sexes and stuff. So I think that's pretty cool. Like off-chain data you've mentioned, right? Like trade for assets coming on chain and all that. One thing that I've kind of wanted to ask you is equity perps have been kind of taking off with Hyperliquid, them launching XYZ trade, and Austrian is also a great example. Uh, and like I've seen that, like, how does for an Oracle, does that change anything for you guys where when these things are on perps and on an on-chain environment, and some people are even saying that the funding they paid can be in terms of dividends and stuff like that. How does that change for you guys when it's just crypto assets to something like a different, entirely different asset class on perps and just not options?
Yeah. So I mean, when it comes to equities, we and this also goes to the point that you made earlier. It's like how market structure has become more complicated over time. And like we've actually had to develop and evolve the system as well. So for example, we've got like on-chain redemption rates. We've got X stocks, and then we've got, you know, the market price, and we've got stocks. And so people need to use those tools in the right places at the right times. And for stocks, for example, like we now are introducing overnight and pre-post, and we're going to roll that out to all of the equities that we have, probably first on Pro, and then we'll start to introduce weekends. We're going to expand to private markets as well. So there's, you know, there's lots of different data flavors that people can use. With regards to like what do we think about when we list an asset class? Because there are so many quirks, like that, you know, forget about funding. Just dealing with the broad category of corporate actions in the world of equities is a tremendously laborious effort. And we don't intend to be like the source of truth for all corporate actions. That's not something in our
Is it
short
like,
term.
just for our listeners, when you say corporate action, is it like something happens in the news and the stock overnight goes up 20% and reflecting that? Like, what do you mean by corporate action in that
It's
sense?
usually, so corporate actions usually mean something like a stock split, renaming the ticker, share buyback has been announced. So it could be the effect could be what you described, but like the more extreme one is the stock split, because you know you see the price double, but you know the market cap or like the float, you know the float halved, or the reverse split, or like, you know, market halved and the float doubled.
Yeah.
So those are the things that, and they're increasing over time. You know, rebalancing. Look at dApps, right? Like they have all kinds of quirks to them as well. So we want to make sure that we represent all of those things accurately, and we do check a lot of different sources to make sure we think we're doing a good job. And when we're setting stuff up, we spend a lot of time in calibrating the necessary metadata that needs to be able to be available for people to represent those markets accurately. But generally speaking, zooming out, listing a equity perp from an Oracle perspective is not very different than listing a crypto perp from the Oracle perspective. It ends up being fairly simple. You're going to want to analyze it differently because, as I mentioned before, you know, if you're using another Oracle, you're going to be able to get fairly robust crypto market data around the world, because you can go get like the APIs from OKEx and Binance, but you are going to really struggle to get very high resolution data for equities. And that's what we've seen. Like, and people will go, and there are other Oracles out there that offer equities, and it's just nowhere close to the resolution that we have. And when you look at, if they don't tell you the sources for the most part, but when you do look at the sources, you realize like, oof, even if this data I want to risk it on, they might get shut down. Like they don't have the full, like if NASDAQ were to find out that you're getting data through this, you know, kind of middleman, like they may not be happy. And so you just got to think about the data security element of it. But ultimately that's, you know, that's what we built this for. And so it's making sure that, you know, we're providing the best experience, like the best possible data.
Awesome. I think we're at time, but this will be our final question, and something that is more timely as well. Recently, Polymarket and Kalshi announced their partnership with Google. Everything is probably the way we look at prediction markets. the interface can look a lot different in just a couple months. And you guys have partnered with them as well and bringing the data on chain. First question is like, what are your observations you're seeing that builders are doing on chain, and your thoughts about prediction markets in general? Like, where do you think we are? It just feels like we're going so fast in this kind of narrative where 1 year back, no volume. I think Kalshi had like 10 million or 20 million, and they recently did 4 billion in volume. So, what do you think about this whole landscape? Yeah.
It's certainly growing. I love it. I think that it's even if you don't participate in it, it's just a great way to get a signal for stuff. And I think it'll just continue to grow. I think we're in early innings. We're certainly in the early innings on the stuff that we put out there on chain for people to build on from Kalshi. But people always have that expectation that it's going to be done much faster. Like same with like the Department of Commerce, and then we went on and worked with a bunch of other government departments, but other stuff, including non-farm payrolls and stuff. That needs to be out there for a while for people to start thinking about it. You can, of course, tie those two things together, and you can say, well, we can resolve a Kalshi market on non-farm payrolls using the Pyth price. That's fine. That's the least imaginative thing, and is probably the first thing that people use it for. The more imaginative thing that, like, for example, the U.S. government cares about is engendering some creativity around the stuff that we kind of cared about 10 years ago, which was like, we're gonna have smart contracts. Maybe we could put a mortgage on the blockchain. Maybe you could put an adjustable rate mortgage on, and you can have the actual like Fed like treasury auctions, like influence that kind of stuff. That's cool. That's actually what they're excited about. I'm very optimistic and bullish on that being a major use case that's not retail, that's an institutional use case in the future. But it takes a long time to build. I think that we've undone the spigot for prediction markets. Obviously, Polymarket has that big investment from ICE, and I think that's a big signal, right? That those are going to become much more accessible. We've kind of graduated from, to some extent, we've graduated from the sports betting element of it, because that's mostly what Kalshi was for a while, or the election betting, because it's mostly what Polymarket was for a while. And now we're starting to see like these little markets come in other areas. But it's a slow build, and I think those marquee events will become huge, like Super Bowl will be huge on these apps, and then you'll start to see like these other ones become a little bit bigger each year. So I think it's a long play. We did see that somebody used a stablecoin DPEG referencing the Pyth price on Polymarket. So it's cool to see that Pyth is getting some play on both of these prediction markets.
I think it's pretty cool how, if KG, if you think about any narrative in crypto, like Pyth is one of those projects that can fit into everything. They can do the institutional stuff, they can do the Kalshi stuff and the prediction market stuff. Mike, I think final question to you, and this is like more of an abstract question. With Pyth issuing so many different assets on chain, you do so much. Do you guys sometimes think like, okay, if someone built this would be pretty cool? Like, is there some use case, something that you think like, okay, if someone built this on top using Pyth data, it would be super awesome?
Oh yeah, I mean, but it's usually not the most commercial thing. So,
yeah, no. So what we've noticed is a lot of devs listen to our stuff, and they end up actually like we get a lot of RFP requests through this question.
Yeah. I mean, I think I think that their Pyth data is highly underutilized from a visualization perspective. The Pyth network doesn't do a particularly good job of today. Hopefully it'll change in the future with some of the stuff that we're building, of creating great dashboards of our data. And with Pyth Pro, like it's going to become maybe a little bit even harder. I think that OpenBB did this pretty well. But I think there's a lot of opportunities to create a visualization for people to be able to take good Pyth data and create all kinds of like trading view style applications around it. I mean, Pyth is in TradingView. In fact, if you were to look up like oil, it's actually the #1 result. If you look up Tesla, Pyth is #2 as a source, like after NASDAQ, which is pretty crazy when you think about it. Of all the people on TradingView that look up, because there's like thousands of different sources, like, and they want to look up an equity, and Pyth is the number 2 source for it, which is pretty wild. But yeah, I think there's a lot of room for people to do stuff there. You know, there haven't been APIs with data like this before. A lot of it tends to be so married to the front end. There's no reason why people can't just go and create APIs with this. So I think that's the thing that would be really cool to see.
Awesome. Cool. Mike, thanks so much for your time. Purple ecosystem forever, as Pepito would say. For coming on.
Exactly.
And yeah, I'm looking forward to spending a lot of time with you at Solana Breakpoint. And yeah, thanks so much for doing this.
Awesome. Thanks, guys. It was a lot of fun to be here. And yeah, looking forward to Breakpoint too.
Thanks, Mike.